Okay, I think we're ready to resume. I'm Burhan Khadbai, Head of Content at OMFIF Sovereign Debt Institute, and in this session we'll be sort of carrying on the discussion from the last panel on capital markets, but really honing in on the green, social and sustainable bond market. So I've got a great panel of guests with me. On my left, Ignacio de Calonje from the International Finance Corporation, Marcus Pratsch from DZ Bank, Head of Sustainable Bonds, and Jessica Pulay, Head of Policy and Markets at the UK Debt Management Office. So firstly, I think perhaps we'll start with you, Marcus. The green, social and sustainable bond market suffered heavy drops in volumes last year. What's the environment like this year? What's your sort of outlook for supply?
We are very optimistic that the market will return to growth. We see this year, expect a little bit more a return to qualitative growth instead of quantitative growth. But we expect in 2024 at least the market to kick really off again. I mean, you know, we have this big sustainability agenda, also all this transition and transformation topics, so there is enough market potential, and we always get it reflected from investors that there is still too much demand chasing too few supply. I mean, 2022 was a very special year for the sustainable bond market. In the first time for more than a decade, we saw really a drop, and it was a little bit different, like this external shock in COVID 2 years ago. The market couldn't recover so much like 2022 when everyone turned from green to social, more to say. But, you know, I mean, if the war in Ukraine will be hopefully soon over, this is also very, very big potential for the sustainable bond markets for doing a kind of restructuring Ukraine programs, for example. And I mean, it was not everything bad last year. I mean, the overall new issuance volume of the sustainable bond market decreased by around 23%. The overall market decreased by 25%, so overall sustainable bonds were much more resilient. Also the green bonds, who only declined by 13%, were very robust at the end of the day, and they reached the 2 billion accumulative milestones, so to say. And we also saw positive signs, for example, that green bond issuance from financial institutions last year even grow in a very shaky market environment. So overall, we expect that this year the market will grow by around 32% at the end of the day, a growth in all segments. And also the everybody darlings of the past, which were a little bit under scrutiny last year, the sustainability-linked bonds, we expect that there will be a further qualitative growth in the market.
Yeah, we'll touch on the evolution of the SLB product later on, but what's the big driver for GSS volumes this year? Is it the return of the green issuance, which you saw fall up during COVID, or is it other parts of the market?
I mean, honestly, we have to speak also from a transition point of view. There is not only an environmental transition, there's also a social transition. We have so much potential. And if you look, I mean, climate change is one of the issues, but think of new topics like biodiversity, which will kick off in the future. There are a lot of social challenges. We are, when it comes to reaching the SDGs, we are really behind in many SDGs. And the new geopolitical situation, also COVID, put many of this more or less goals behind, and there is a huge sustainability financing gap, so to say. And yeah, we can only do this with the help of private capital, because public capital is not enough at the end of the day.
Yeah, and it's interesting you mentioned about the Ukraine reconstruction, because that could really open up opportunities for Ukraine to develop a large, a GSS program to finance that reconstruction recovery, right?
Yeah, for example, I mean, even before the war, a lot of Ukraine cities had kind of green development programs. And now if you look at rebuilding all the infrastructure, this has to be done in a sustainable way at the end of the day. And these are huge opportunities for the EU or for MDBs or for whomsoever to do this in a kind of capital market transaction way.
Okay, and just moving on to we mentioned SLBs. We've not really seen too much development from Europe in SLBs, well, from sovereign perspective anyway. Why is that? And do you think Europe will naturally move into looking at SLBs from a sovereign perspective?
I mean, SLBs are, from my point of perspective, a very smart tool from a technical point of view, if you do it in the right way. I mean, there are a couple of things you really have to look at. I mean, when you're defining the KPIs, you have to choose material KPIs, and especially when it comes to the SPTs, the targets, you have to be very ambitious. It's not a business as usual scenario. I would say an SLB is not suitable for everyone. I mean, if you have enough assets, do use of proceeds, green, social, or whatsoever bond. When you are a smaller player, and for example, we are also serving a lot of small and medium-sized enterprises, it's a very good kickoff for sustainable funding. But you have to do it in the right way. When it comes to sovereign sustainable funding, I think it's a very smart way, because a lot of sovereigns already have sustainability strategies. They have their Paris climate change goals, more or less, to say, and it's a good opportunity to connect. And I mean, we have seen with Chile and Uruguay, for example, that it can be very successful, especially Uruguay also was very smart connecting this to forestry, for example. So if you do it in a credible way, it really works, and I expect more or less smaller sovereigns to do a similar thing at the end of the day.
Okay, and Ignacio, turning to you, I mean, what are your thoughts on the sustainability-linked bond product, and are there sort of issues with, you know, strengthening the product and to sort of avoid sort of greenwashing and things like that?
Yeah, I mean, there's been I suppose a huge every second day there's an article on greenwashing. So I think there's increased scrutiny, which is quite right for a nascent market. You know, I think in the previous panel there's a lot of discussion about data, and I think if you're talking about one way of addressing this greenwashing is data and the quality of data, and I think whether it's through some of the regulatory sort of initiatives, whether it's through TCFD, SEC, a number of other sort of initiatives to improve the disclosure and transparency of data around climate and social data, and I think that's one thing that has to be done. But I think the other thing is, you know, it's also for sustainability coordinators, as sort of banks or institutions, as well as second-party opinions, to really sharpen their pens and pull their socks up. You know, I think Marcus referenced, I think there are key mistakes that are done in sustainability-linked financings often, and you can say the materiality of the KPI is one, key one. We've seen lots of instances where the issuer has forgotten about a critical KPI. Scope 3 is a prime example. You know, a port that is having a KPI on Scope 1 and 2, fantastic, love your electric cranes, but hey, you're the largest port exporting coal from a certain country. Well, that if you forget about that part of the equation, don't be surprised that there will be accusations of greenwashing. So I think a lot of that about materiality of KPIs, a lot of it is around Scope 3, but not only, there are others. I think in terms of ambitiousness, also, and I think ambitiousness is difficult because it can be quite qualitative. What is ambitious? It's very contextual, and we invest and lend in emerging markets, and I think it's even more complicated in those contexts. So I think there is a bit of, you know, there are some criteria. You can look at SBTI and other sort of, parameters, but I think it is quite qualitative what is ambitious and what isn't, and we do a lot of work as IFC where we work with our issuers to sort of look at that and try to make sure that we're comfortable with that level of ambitiousness. But again, I think there's been a learning curve for second party opinion providers, for banks, for others, and investors in what is ambitious. And I think the third element in terms of greenwashing is, all right, that's all great. You've got a relatively material KPI, but how about your holistic sustainability strategy? And sometimes what happens is they may have great climate KPIs, and they may be, you know, material, or social KPIs may be material, but there may be some elements of how they're conducting their business which isn't consistent with that sort of sustainability, be it human rights around the supply chain, be it biodiversity issues, etc., which at first glance don't seem to be material KPIs because it doesn't sort of register, but there are, the company doesn't have that holistic sustainability strategy. And so that's a sort of third big bucket of where we see greenwashing risk. So again, look, it's a nascent market. I think there have been some lessons learned. And I'm hoping we're getting there, as Marcus says. I think now the era is scrutiny on quality from all sides.
Yeah, thanks, Ignacio. Before I turn to Jessica to talk about your sort of approach to the green bond market, I just want you to just maybe respond to what Ignacio is saying about those greenwashing risks. Do you agree with those, and are there any others that you'd add to that?
So first of all, good afternoon, everybody, and thank you very much indeed. I hope you can hear me at the back. Hope the microphone's working. Yes, thank you. It's a great pleasure to be here, and I'd like to thank you, Burhan, and also OMFIF colleagues for the kind introduction, and also to both Ignacio and to Marcus for the very good summaries. In terms of greenwashing, I think it's fair to say that that is a topic which is taken very seriously here in government in the UK. Indeed, a private-public forum has been set up. It was set up a while ago with ministerial encouragement to bring together parties both on the government side and in the private sector on the investor side to try and tackle this issue. And I think it's an absolutely fundamental issue for the future of the sustainable bond market in all its forms. So I very much endorse some of the issues which Ignacio pointed to just now. Maybe I should just talk a little bit about Burhan, unless you've got another question on greenwashing.
I was going to turn to your sort of approach to the, obviously the UK made its debut in the green bond market a couple of years ago. Did you want to talk about your approach? Did you ever think about doing an SLB? Obviously went through the more traditional use of proceeds framework, and what the evolution has been since your arrival, yeah.
Yes, well, thank you very much indeed for that. Maybe just to recap on the UK's green financing programme. This was launched in 2021 in June with the publication of our Green Finance Framework. It certainly represented a huge milestone for us at the UK Debt Management Office, also for our colleagues in the Treasury, but I think arguably also for the sustainable finance market more broadly. We brought some innovations into that market which have subsequently been replicated. But I think it's also really important to note that before the government took a decision to issue, the government needed to be satisfied that a sovereign green bond, a green gilt as we term it, would actually represent value for money for the UK taxpayer, that it would enjoy strong and sustained demand over the long term, and also be consistent with the government's wider fiscal objectives. So we'd been closely monitoring the market for some time. We'd engaged with market stakeholders over a long period, and this aspect of market engagement is a vital part of our issuance strategy, a vital part of our normal issuance strategy, but even more so when we were introducing a new product into the market. We have regular consultation meetings with our primary dealers. We call them here in the UK gilt-edged market makers, or GEMs. We actually had one on Monday. We published the minutes of those transparently the following morning on our website. But we also engage bilaterally with a wide group, including investors, including other banks, and so on. What we felt in terms of our approach was that it was important to reflect what the market really wanted to see. And these outreach exercises, and we also did investor roadshows, both following the publication of our framework and then again in the run-up to the launch of our first green gilt, which was in September 2021. We heard some things that the market really wanted to see in our program. We also had, in addition to that, we assembled what we called a stakeholder discussion forum. This consisted of a group of academics, as well as people from the finance community more broadly, who had experience in that market. And in fact, you can get the list of those people on our website if you'd like to see that. But what became clear from all of this engagement was that what the market wanted to see, as far as we understood it, and as far as, is this working still? As far as we heard it, was not only that green gilts would raise financing for the government in a smooth and cost-effective way as possible, but also in a way which was fully in line with our debt management objective, which was to minimize cost over the long term, subject to risk. And so in that context, we considered the green gilt program holistically. in the context of our overall approach to the gilt market. And how we did this was we felt it was important to replicate the same structure in our green gilts as we had in our conventional gilts, and also the same approach to the market. Now, obviously, this was then overlaid with the attributes, the specific attributes of green bonds that are now very familiar to us all, such as alignment with the ICMA green bond principles and so on. But in terms of the actual structure, the plain vanilla bullet maturity, the semi-annual interest payments, the eligibility for repurchase, repo transactions, and the inclusion in relevant bond indices, those fundamental aspects were what we heard from the market to be absolutely vital, and that would achieve the kind of liquidity characteristics which were so important to market participants. Now, obviously, as I say, the main difference is that the funds raised through the program are allocated to green projects, and that was in sectors like renewable energy, green transportation, and those are detailed at quite a granular level in our first allocation report. This was published in September last year, and it is on the DMO's website, so you can see those. And you asked just about sustainability-linked bonds, and I think what I would like to say is, this is a market overall, a sustainable bond market, which is still in its infancy, effectively. Therefore, any new developments are clearly to be welcomed. And I'd just also like to say that the UK government never rules out new structures. But at this point, it is the case that we have no current plans to launch an SLB. But just to share perhaps a few high-level observations, if I may, the structure, as Marcus alluded to, is theoretically a neat one because it references the transition to net zero from a whole holistic sovereign perspective, but it is a departure from the plain vanilla type structures of conventional bonds, which we've seen by sovereigns and replicated then by green bonds. For example, it contains contingent step-up payments, sometimes even step-down features, which would reference, a government's greenhouse gas emissions and so on. Now, there are some practical, real-world challenges to these types of structures. For example, and we're getting into the plumbing here, but how would such structures be booked in systems, in investor systems? Therefore, how would such structures be valued? How would, therefore, such structures be traded? And it is these kind of aspects that I think in the context of a sovereign, where the volumes are very large, that need to be, considered very actively. And I'm not sure we've bottomed out all those issues at this particular juncture. And given the focus that we heard from investors on liquidity, liquidity, liquidity in our initial outreach, I think there are still some questions around that.
Is that something that you agree with, Marcus? I mean, are those some of the, I guess it's quite still in its infancy, as Jessica says, the product, and liquidity is quite important for sovereigns as well. So are these some of the issues that you agree with as well?
I mean, liquidity is generally a big topic in the market. This is also what we hear from a lot of investors who would like to buy green social sustainability bonds on the secondary market, and they are just not available because, most green bond or social bond investors nowadays are buy and hold investors. So of course the market needs to grow. I think one of the most important things is also to have a growing secondary market, more liquidity, and then the products will kick off.
And just turning to Jessica again, but from the UK's perspective, have you also seen a sort of growth of the sterling green bond market as a result of your arrival in the green bond market?
Thanks, Burhan. I mean, I'd like to answer this question, I suppose, in two ways. First of all, we have seen a very positive reaction from the market, from the launch of our Green Gilt program. This was something that we'd had significant representations from the market for ahead of our launch. And now that it's been integrated, we've seen, very good responses from the investor community, from other issuers, for example, who we've engaged with since we issued, just to share views, share opinions, and from the stakeholder community more generally. In terms of the ESG/green corporate space, there have been a few corporate issuers in the sterling sustainable bond market since we launched that program. Not a huge amount, I think it's fair to say. There have been quite a few SSA issuers in sterling in this market as well. But I think it's also important to look at the standard setting aspects of the UK's government's program. And although it may seem that we've been active in this market for a while, and indeed we've now been auctioning our green gilts as well as issuing them through the syndication mechanism, which just shows the depth of integration within our program. From a reporting cycle perspective, we're actually going to be publishing our first impact report later this year. And that's important because one of the innovations which we brought to the green bond market was to report not only on the environmental impacts of funds raised under the program, but also the social co-benefits of that. So I think the standard setting side, which we've tried to bring to the market, has been important for the, for the issuers world more generally. I mentioned also the allocation report, which was published last September. And this transparency, I think, has also been quite welcomed by investors. Again, I think it's quite helpful for the standard setting for other issuers in this market as well. We've had positive feedback not only from institutional investors on that report, but also from retail investors who have accessed green products through our sister institution, NS&I, National Savings and Investments. Now, they launched retail green savings bonds. Now, this was another innovation that the UK brought. Now, what they liked was that we included case studies in our report. So it's quite user-friendly, I would say, quite accessible. We covered, for example, plug-in car grants. We covered the public sector decarbonisation program in the UK. You can look at the report on the website, tree planting, flood and coastal defences, and so on. So, yes, I think there are a couple of different aspects here. It's become a market where there is a reference out there from the government which is helpful. It has attracted some new issuance, and I'm hopeful that we may see more going forward.
Okay, thank you. And Ignacio, just turning to you from what Jessica was saying, how important is it for issuers like the UK when they come to the market with innovative green bond programs to sort of set standards and sort of increase innovation in this market?
Yeah, no, whether it's the UK or other governments, it's obviously key to see credible issuers come to the market using these instruments. I mean, as IFC, we've also been in the green bond market for over a decade now, and I think issued over 170 green bonds in at least over 30 currencies. And so I think it's important for whether it's multilateral sovereigns to participate in the market in a credible way, setting standards so that whether it's corporates or other sovereigns can also sort of follow that lead and really participate in the market. So I think it is crucial, and so welcome what the UK is doing in the market as a sort of standard setter. So absolutely.
And just staying with you, Ignacio, I mean, there are all the other developments, not just SLBs, but other types of labelled bonds like biodiversity bonds. What are your thoughts on these types of innovations as well?
Yeah, look, we're looking at lots of different flavors of sustainable bonds. So we've published a guidelines for blue loans and bonds. We did a number of financings which were blue, trying to take part of the green loan and bond sort of principles and applying that to transactions which had an impact on oceans and water streams. And for example, we did a transaction with a Brazilian company, Sabesp, in the area of Sao Paulo around sewage systems, and they cover around 140,000 customers there, and did that as a blue loan. So that's sort of one area that we're looking at. On the biodiversity side, it's a huge topic. Our sister organization, World Bank, last year did a Rhino bond, which was to fund two protected areas in South Africa and have a performance sort of trigger based on those conservation efforts around black rhinos specifically. But more broadly, we're looking at, with companies, seeing how we can integrate biodiversity elements into some of these structures. And it might be indirect, because how you measure and track biodiversity is complex. There are really interesting innovations around eDNA and others, but still, so we're seeing how we can do those types of transactions with private sector partners, for example, with renewable companies, and trying to see how, if they're installing wind farms, how we can do biodiversity programs around those wind farms to protect, whether it's avian populations or other types of species. So there's a huge amount of innovation. It is complex, particularly if we're talking about biodiversity. It's extremely complex because we're talking about ecosystems impacted by many different players in the surrounding areas. But I think that's part of the interesting challenge, is how do we take an ecosystem approach with particularly private corporates and work on that, and with governments, of course.
And Marcus, what are some of the discussions you're having with particularly corporates, as Ignacio said, about some of these structures of bonds, of GSS bonds?
Mm-hmm. I mean, generally, what we see is that there is a kind of diversification tendency in the market. We see new issuers, we see new and innovative structures. I mean, innovation and sustainability go hand in hand. Anyway, we also see a little bit a trend, we call it green goes rainbow. So a lot of issuers are moving beyond the pure green perspective, making the bonds a little bit more colorful, including social topics. I mean, as I say, biodiversity is a kind of new climate change when it comes to urgency from my point of view. We have the topics also with a blue topic, with water, which is very urgent, more or less to see. So these are all the things we are talking about with issuers. Of course, then there are a lot of questions also coming from the issuers. Do we really need a label bond? What is really, let's say, an advantage of issuing a green, social, or sustainability at the end of the day? There is always the question of the greenium. Does the greenium exist? I mean, as you know, it also depends on the market conditions. Sometimes you have a greenium, sometimes you don't. I mean, I always say the greenium is not the most important aspect of the issuance. It's more or less having sustainable funding, having a credible contribution to the sustainability agenda, maybe broadening your investors book, because you often see, especially with the maiden issuance, a lot of new investors in the books you never have seen before. And of course, it's also a kind of, reputational thing. From my point of view, sustainable finance becomes the new normal anyway. We also will have the unsustainable business, but that's a niche business of the future, more or less to say.
So, and just to add to that, I think mentioning social. I mean, for us who work in emerging markets, social is key, and we tend to like the belt and braces approach. So we, even if we're doing just a green financing, we actually do like to incorporate sustainability-linked features, maybe using a social KPIs to sort of complement that, because I think just transition is key in making sure that there's that integrated approach. So we're not only looking at climate, we're looking at social aspects, and so very often we have it's a gender KPI or another sort of social KPI in addition to maybe a climate KPI or a green use of proceeds sort of loan. So I think that's very important, particularly in the emerging markets that we work in.
Yeah, that's interesting. I think the social KPI aspect is still developing as well, as we've seen in SLBs. And Marcus, did you want to say something on that? Or?
Yeah, I mean, it's an important topic. I mean, we have all learned that sustainability is more than environmental issues, so social issues are at least as important as all the other things, like also economic and governance things. I mean, when we talk about transition, from my point of view, there's not only an environmental transition, we also have a social transition. We need to go on with the social things of the end of the day. I mean, it's the same. If you have an SLB, you can also do it, of course, with social KPIs. Here again, they need to be material. You need to have ambitious SPTs. Sometimes, of course, social. I mean, the challenge is social impact is a little bit more difficult to measure. I give an example. If you build a hospital, or if you have an agenda to build more hospitals, does it have a positive impact? If you have an area where you already have 2 or 3 hospitals which are not fully utilized, you don't have an impact. But if you go to an underdeveloped area, somewhere in an emerging market countries, and you build the first hospital there, you have a huge impact at the end of the day. So this is something you have to take in mind when you talk about social KPIs. And the other thing is, I mean, if you're looking at the central bank perspective, central banks actually prefer to buy green SLBs, not social SLBs. So also you have to build the respective market environment for this.
Okay, and what I mean, you mentioned this before, but what are some of the most common questions you get from, I guess, both sides, borrowers and investors, when they're coming into the GSS market?
I mean, as I said, the issuers are always interested, okay, which standards do we have to follow? You know, there's now the big discussion going on with the taxonomy-aligned bonds, with the future European green bond standard, which is, from my point of view, a very ambitious thing. I mean, you know, with all this back testing, only a few bonds would now be fully EU taxonomy compliant. So from my point of view, we will see a parallel world for time being, and acceptance is very important. I mean, the European green bond standard can only work if it's really accepted. And at the moment, I'm still a little bit cautious, you know, also with the taxonomy. Usability is a very, very big challenge. We have a lot of black boxes and question marks behind. So let's see how this will develop. I mean, the initial idea of the EU action plan and the taxonomy to grow the market is not bad. But of course, acceptance and usability is key at the end of the day. When it comes to issues, also one big question is, how can I make sure at the end of the transaction that my bonds will be allocated to portfolios with impact? So what we more and more see in transaction is that we also, as a lead manager, are required to do a kind of, you know, assessment of the investors in the order book to more or less, assess their greenness or socialness, respective on the bond. And when it comes, of course, to investors, it's always the important question, okay, how do I set up a good ESG investment strategy? Do I focus really on the use of proceeds, or do I focus on the sustainability of the issuer in general, or do I do a combination? How maybe also to cope with, let's say, this transition topics? I mean, we see a kind of new, let's say, philosophy among investors, which is called transform instead of divest. You know, in the past there was very much a black and white decision, sustainable, non-sustainable. If it was not sustainable, it wasn't bought. Now, more and more issues are looking, investors are looking a little bit more into the future, identifying, so to say, the sustainable champions of the future, and they are willing to invest even in critical companies as long as they stay on a, let's say, credible transition path at the end of the day. So we see with this diversification tendencies, we also have a lot of more bespoke choices for investors, and this is, from my point of perspective, a good sign.
Maybe just to add to that, because IFC, they were a lender and investor, and I think what we find really interesting in these new instruments, it precisely allows us to engage with companies in a more strategic discussion and dialogue. It's no longer, I'm going to just lend you some money to build a renewable project in Kenya or wherever it may be. It's, right, we'll do that, but let's sit down and understand your long-term strategy around sustainability, on climate, on social, etc. And let's make sure that we're seeing eye to eye, that you're going down the right trajectory, and frankly where we can help you, down the line. And I think that elevates the level of strategic discussion around sustainability to a very different level. So in a way, these instruments are an excuse to have that discussion, have that sit down and strategic discussion. And I think it's great for companies, it's great for us, and it just enriches. And look, sometimes there are no rights and wrongs or black and whites. There are nuances in things, but at least it lets us have that discussion and hopefully help companies to on the transition path.
And does that in turn sort of make investors create sort of more sort of dedicated investment strategies and dedicated funds to invest in these products?
Yeah, I mean, we don't have dedicated funds. We just invest our balance sheet. We do have increasing percentages of our balance sheet and that are going to be dedicated to climate finance. Actually, by 2025, 100% of all our investments have to be Paris aligned. We're already virtually there. So we've got some very strict screening criteria around Paris alignment, and that's we can't do anything else than that. What it is requiring from investors, at least from us, is getting the resources to engage in these discussions, doing the analysis, and making sure we don't fall into greenwashing type traps, because there are nuances, and it takes a lot of knowledge to make sure that something is ambitious, that they are doing the right thing. Particularly in complex contexts or countries where there aren't easy benchmarks or comparables. What is the right transition trajectory for a company who only has energy assets in Bangladesh? Bangladesh is a country that has limited renewables potential. So what does it? How do they do that? So again, it takes a lot of resources to sort of think through these things, and that's one of the challenges we have, is finding those resources to think through these things.
And that's interesting about this sort of ambition of, I guess, the sort of emerging markets. But I mean, Jessica, is it important for developed markets to also have that same ambition with GSS issuance, and how can they perhaps achieve that or sort of further that?
Thank you, Burhan. I mean, I think the developed markets, and obviously that's a big universe of very different issuers, and it's quite hard to group them all together in a way, because most of the main issuers have now developed green bond financing programs of their own, but they're all different, and they all adopt slightly different approaches, slightly different strategies. I mean, you've seen that with the UK. I think I've spent quite a lot of time, and I don't want to continue talking about that too long, but I think that strategy is very clear. We've wanted to replicate what we do in our standard gilts with green gilts, and I think that some of the other issuers are relatively comparable. You know, this strategy of building up the bonds to quite a sizable amount. I mean, that's something that, for example, our colleagues in France have done, and that's been the approach that they've taken. In Germany, since you've asked me about other markets, I wouldn't normally comment on others when they're not sitting here on the panel, but they've taken another approach, also very successful, with their twinning strategy, so that you have two bonds out there, a green one and a standard bond, and therefore, you know, one can trade one against the other. There are different reasons why different issuers, and I'm talking really within the G7 community here, have adopted different strategies. But I'd like to think that ours is more adapted to the UK market, and that's why we've adopted the one, because it's fitted in quite neatly. And when I look at how the financing program here has evolved, and this is quite timely actually to be having this panel, because we announced our new financing program for the upcoming year, 2023-24. We're approaching the end of this fiscal year, and just at the end of next week. We announced that just last week, and what our program was, so we can take a retrospective view as to how the program has actually adapted. And you know, we've done these two gilts at the key maturities. So the UK market has been historically quite focused on certain key benchmark maturities, the 10-year point, the 30-year point. And that's why we chose the 2033 as it then was, to allow it to roll down the curve to become a 10-year, which it now is. It wasn't when we first issued it. And the same with the 2053. And we have now reopened those. So the 2033, we've now reopened 3 times since it was first launched. It's now a size of £18.5 billion, so reasonably sizable, which was always important to us. And the 2053, it was initially launched by syndication, being, you know, also a longer maturity, which is more customary in our gilt world to syndicate longer maturities. But we've now reopened that also by auction, and that's a size of 12.9 billion. So these are sizable transactions. We do about 80% of our gilt issuance via auctions. And so I think it's fair to say that now we've launched green gilts through this method, it's a further sign that they've been integrating. Now, in the context of our overall funding program, so last week on the 15th of March, we announced that next year's program is going to be a total size of £246.1 billion. We're going to be doing 241 billion through gilts, and Treasury bills are going to take up the slack. But we were able to announce, I'm very pleased to be able to announce, that green gilts are going to be the same amount as this year. So that's going to be £10 billion for the year starting in April, just a couple of weeks away now. We are going to be focusing initially on reopening those two green gilts. That's our priority, but obviously we review market conditions constantly, and we will prioritize further reopenings, but this will be kept under review subject to market and demand conditions. Another thing just to note, we had yesterday our final gilt operation for this year, so we're very much looking ahead now to our next financing year. We're actually going to be announcing tomorrow morning, that is Friday 24th, before market opens, what our calendar will look like for the next quarter. So there will be further details of our overall financing plans, which will be announced tomorrow morning.
Okay, just two quick questions off the back of that. Firstly, how have your green bonds been received compared to your conventional or non-green bonds? And you mentioned your refinancing remit for the next financial year, which will be a record amount of net supply. Do you anticipate that making it more difficult for you to issue green bonds or for investors to absorb those gilts when there's so much other supply coming in conventional format?
I mean, I think the beauty of green bonds is that they do have a following, and they do have an investor base here in the UK, and investors, and we've heard this very directly just in the last week or so, are very supportive of the green gilt product, and I take great reassurance from that as we approach the next financing year. So I wouldn't be concerned about that level of issuance on the green gilt side. I think the fact is that we have made that commitment. We've clarified how that objective will be achieved, and as I say, I think there is robust support for that program from a number of investors here in the UK, and we've heard that just this week as well at our consultation meetings.
Okay. I'm aware we're sort of coming towards the end of this session. Are there any questions in the audience for our panelists? Yeah.
Hi, I'm Jake Hallam from NatWest Climate and ESG Capital Markets team. Just a question on sustainable linked bonds, if we could circle back to that. I think one of the problems I see with the market is that actually bad sustainable linked bonds can appear to be successful for sort of non-ESG reasons, be that pricing or yield. So, and I think the reason for that is that investors can just treat them as sort of conventional bonds and not sort of claim any of the impact for their own reporting. So question to the panel is, how do we sort of overcome that? Does it require investors to be more disciplined in their investment approach, or do we need sort of some sort of regulation to combat that?
Yeah, I think we touched on sort of strengthening the sort of SLB product, but Marcus, do you want to take that?
Yeah, I mean, from my point of view, SLBs are more for a common, broader ESG strategy suitable. And I said, from my point of view, if we as a lead manager, we do not recommend every issuer here which approaches us to really use an SLB. We always say, of course, if you have enough assets, do a credible use of proceeds strategy. But we think SLBs are a very good complementary thing, especially for smaller corporates, also for smaller sovereigns. And if you do it in the right way, then investors are willing to buy this for their broader ESG portfolios, more or less to say. But of course, it's not suitable for, let's say, a very dedicated green or social portfolio, because here you really have to have the commitment that the use of proceeds will be used. I mean, another thing, what we have seen a couple of times in the market, not so often, is that even the issuer is allowed to use the use of proceeds of an SLB for common things. They were used for dedicated sustainability things. So at the end of the day, a good, I would say, qualitative thing is issuing as an SLB, but also using the proceeds for a dedicated sustainability challenge.
Yeah. And that's something that we do a lot. We combine both features. But I think to your point, maybe if you look at it from the narrow lens of debt capital markets and how the bonds are trading, you're right. I think that the bigger issue is a reputational issue for the company. And that maybe doesn't hurt the trading of the bond. It may do a little blip here or there. Definitely damages the reputation of the company in terms of equity issuances and all the rest. And I think that's the main sort of control, is they'll be put. It would be a very negative PR from that perspective. At least the more egregious sort of bad issuers.
Yeah, in many ways, that sort of is more sort of severe than the financial penalty of SLB, isn't it? The reputational damage, I think. Yeah, question.
Galia Wells, PricewaterhouseCoopers, Sustainable Finance. I did want to challenge you on that regarding reputational risk. Last week, EBRD announced one of the SLBs they invested failed on their KPI targets. What it means, they only reduced their Scope 3 emission by 36% versus 40% target. However, kind of, and capital markets colleagues might sort of collaborate on it. I didn't see it as reputational damage to the company or to this particular instrument. In fact, I wonder why we don't see more sort of green transition bonds. And in some markets, in Japan, they were quite a successful instrument. Whilst, basically on one of the last panels I've been, capital markets experts were saying we might actually see death of SLBs because investors don't want to touch it. You don't have green UMs, there are lots of reputational risks. But how are we going to achieve transition if we do not have this kind of instrument which is wider and allows to finance transition? So this is basically just, half question, half kind of muttering around, how we can ensure we achieve transition without SLBs.
So there's quite a bit of overlap between transition finance and SLBs and how you approach those instruments. I didn't understand. Did you say you mentioned EBRD SLB that didn't achieve the target, right?
They invested, I think it was a Greek.
The Greek.
Yeah.
But the fact that they didn't achieve the target for me is not an issue, in the sense that actually the issue will be as we go further down this market. If everybody achieves the target, actually that will be an issue. So I think my rule of thumb is there has to be a 50-50 chance whether they'll meet the target or not. It has to be ambitious enough that there's a reasonable chance that they won't meet the target. And for me, that's not a reputational issue. The reputational issue is they try to, a company who doesn't, or misrepresents, or doesn't take into account some of the key issues that they have to deal with from a sustainability perspective. So that for me is, fine. If they don't meet the target, but they've actually tried and they're close to the target, it shouldn't have a reputational impact, from my perspective. Because there are good reasons why companies can't reach a target. They couldn't deploy the renewables that they wanted to because of permitting issues or whatever, and that's fine. But it does take a bit of sophistication for the market to recognize that.
On the point of future SLBs, the opinion that they might die out because investors are not interested in reputational risks.
Marcus, you're close to the market. As an investor in SLBs, again, actually, we actually like the combination. We want to be able, we like belt and braces. We like to know where our money is going and the impact of our money. So we do like green instruments and use of proceeds instruments. But we also like to set the issuer targets in terms of sustainability and be able to give some modicum of incentive or disincentive for them to meet those targets. So actually, we like it, but and the quality hopefully will continue to improve. But Marcus, you're
you delivered an interesting buzzword, transition bonds. I'm personally a very big fan of transition bonds. I know there is always a big discussion, do we need another label? But honestly, transition bonds can be technical very easy. You can do a use of proceeds transition bonds where you finance a dedicated transition policy, or you put the issue as a whole in the focus and you do an SLB transition bond, more or less to say. And if you look at the overall sustainability agenda and the impact Where do we generate the biggest impact? By painting already dark green things a little bit greener, or by really helping to move, let's say, brown and critical industries even to become light brown or light green? So here we have the biggest impact, and this is where I see really a huge potential at the end of the day. And for me, labeling something as a transition bond increases the transparency. Everyone knows, even the investor, okay, we are here dealing with some critical issues, with some critical business models and critical things, and then you cannot be accused of greenwashing. And I mean, we need to really move forward step by step. We cannot paint the world green from one day to the other. We cannot put away all combustion engines from one day to the other. We have really to have a credible transition path, and that is why I personally think the SLBs will also play a very big part in this transition financing story.
Yeah, we've got a question here.
Hi, sorry, not a question, more a comment. I work with ICMA, so we provide the global principles for the sustainable bonds market. And just on the topic of transition, I mean, SLBs can be used for many things, but they have kind of emerged as an ideal instrument, if you will, to finance the transition, to underline the transition in strategy of an issuer. But just to say, you can also use green bonds, for example, to finance the transition projects in that case. And what I wanted to add, what hasn't been mentioned yet, in addition to the principles, when you look to finance the transition, we also provide guidance in form of the Climate Transition Finance Handbook, which, if added to the principles, to the framework, that will actually add credibility in the market as well, because that's a list of recommendations to issuers as to what they should disclose, for example. Just to add that.
Okay, thank you. Are there any other questions in the audience? Yep.
Yeah, Anthony Belcher from ICE. I just wonder, when I look at the kind of carbon credit markets, there's always a big focus on additionality. When you're looking at the GSS markets in terms of the additionality of the use of proceeds versus what they would have been used if they'd been issued as standard bonds, does that come up in discussions? Is that something that investors worry about and when they look at pricing?
Yeah, I mean, of course, this was a big topic right from the beginning of the market. You know, it was at the beginning, I would say it was a lot of refinancing, but things have improved over time. We also see, especially when we look at the sovereign side, you know, there are future budgets included in the respective sustainability frameworks. We also see now kind of additional projects being financed by this. This is something which is actually improving from my point of view. But of course, you are right. I mean, the market is still a very small but shiny light. It's in certain ways, honestly speaking, a kind of refinancing stories. You can always argue these are things which would have been refinanced anyway. But I think labeling those things gives the right signal. Yeah, it gives the right signal also to other issuers to do the same. And anyway, we need to improve and increase the market in some way.
Ignacio, do you have anything to add to that? Is it?
No, I mean, I think you're right. I think the labeling itself, it is true that many times the additionality is questionable. I mean, there is no additionality, to be quite frank. But even in those instances, I think the labeling is useful, sort of signaling for investors and others. We've had a lot of discussions internally about additionality on sustainability-linked structures. What's the difference of a few basis points here or there? Does it change actually behaviors, or does it just, and I think it depends on the issuer. It depends. There are instances, particularly in emerging markets with smaller issuers, where actually it does sort of make them, and we have a discussion, and does push them to sort of aspire to more. So there is an element of additionality, but not always. So it's a bit more murky.
Any other final questions? Otherwise, we'll next, I think. Oh, question there.
Hi, Anna. I'm on the Sustainable Cluster Development Initiative working for emerging markets. There are some interesting instruments in the sustainable finance, like, for instance, sovereign debt restructuring and debt for nature swaps. which have not been mentioned today. Can you comment on those and how that can be applied for, because you mentioned twinning, which to me is actually covered a bit of a point of swaps, but how it can be applied for emerging markets as well.
Debt for nature swaps.
Debt for nature swaps, yeah.
I think Ignacio
And how can be used to protect the nature and apply it within the current context of the sustainable finance.
I think this is an increasing theme. I think there's been more talks of these products, and I think Ignacio, you're probably best placed to.
Well, I'm not sure. Maybe Marcus is best placed, but because it's been mainly sort of sovereign issuance, and there's been one sort of famous one that was done. I'm blanking. Bermuda, Belize. Was it Belize? Yeah, Belize. Sorry. Yes. So we don't as IFC we're not into sort of sovereign sort of issuances. I think that particular case was quite specific to the situation, and we have been thinking how we could replicate those types of structures in the sort of the private world, and we found it challenging. Was trying to see how we could replicate that type of structure in the corporate world. But I don't know, Marcus, if you've seen anything, or Jessica. I mean, I suppose it's not something that.
What we generally see, and I mean, every new structure or any new instrument is very much welcomed by the market. We have to see, okay, some products will still remain as a niche products. We are also talking, for example, in the corporate world about, green ABS or green derivatives, which are still a very, very, very small and shining light, even smaller than the overall bond market. But of course, I mean, if we look at the trillions of dollars we need for financing the sustainability agenda, not only from the environmental point of view, but also from the social point of view to achieve the broader SDGs, every instrument more or less is welcomed in the market here.
I mean, I would say it is the debt for nature swap, at least the Belize one, etc. does rely on some form of donor concessional financing. And that's something that we're trying to see how we can incorporate donor and concessional financing into these structures, particularly if it's related to nature and biodiversity and major sort of public goods. And that's sort of an ongoing discussion we're having with different sort of donors, that how we could sort of incorporate that into structures.
Okay, so Markus Ingholt, Danish Central Bank. So I have one very specific question on your relationship with central banks. So in particular, do you experience challenges when issuing green bonds or sustainability-linked bonds, other types of bonds, in relation to the collateral frameworks that central banks apply for repos and outright monetary policy lending?
So I'm not the best place to answer that because I'm not on the issuance team of the IFC. So, but I don't know if any.
Maybe I could just come in from the UK side, and obviously it's going to be specific to the UK, and I can't comment about central banks more broadly. But one of the features that was very important to us when we set up the program was that our sovereign green bonds, our green gilts, would be indeed eligible for repurchase transactions, repos at our central bank. That was something that investors very much valued, and it was also very much wrapped up in the context of trying to provide an instrument which is liquid, which is tradable, which is valued. So my personal view is that this is very important, and it's an important feature to be included in the product.
Thanks.
Okay, I think we're coming towards the end, but I think perhaps before we wrap up, perhaps we can get some key takeaways from each of our panelists on the discussion today. I'll turn to you, Marcus, first. So your sort of final sort of closing remarks on what we've discussed today.
My closing remarks is the social bond market is still a small but shiny light, but it's moving into the right direction. I think it really can help to mobilize private capital, which we need for financing the sustainable transformation agenda, and I can only encourage more issuers to come on the market. Then we also have a broader supply side. I can only encourage investors more or less to start ESG integration, and I can also more or less encourage the regulators really help to grow the market, but not over-regulate the market.
And Jessica?
So from the UK side, and I don't want to spend too much time standing between you and lunch, I'd like to first of all thank you very much indeed for the opportunity to speak to everybody. It's been a real pleasure to share views with our panelists. And maybe just to say that this is a journey. This is a journey for the whole market, and we're still relatively early on in this journey as a market. We'd like to think that we provided a milestone on that path, but nevertheless it is still evolving, and I think what has been very helpful in this discussion today is that we've seen what some of the critical aspects are on that path. So a big thank you to you all.
Thank you. And lastly, Ignacio.
Yeah, well, thank you to all of you for having listened to this. I think a couple of takeaways. One is I think we still have a lot of work to do in terms of enhancing the standards, making sure that we're doing robust structures, and it is an early stage of the market. But I think in the last even 12, 18 months, we're seeing quite a bit of developments there, and I think that's to be welcome. I think the other thing that I would say is we as IFC. We're helping emerging market sort of issuers to get into this market. And one advantage is that emerging markets have come a bit later into the game as compared to developed markets. And I think there are some really good lessons learned that we can take from some of the successes and mistakes done by certain developed market issuers, and see how we can ensure that at least in the emerging markets they do the most robust transactions that are possible. So.
Okay, thank you. I'd just like to thank the panelists for a really interesting discussion, and I think lunch is next, but then we'll resume with a session on ESG data after lunch.